Wall Street closes higher on Thursday. S&P 500 adds over 0.5% and closes at a new high. The U.S. retail sales data comes in lower than expected, pushing the dollar and yields lower. Stocks in the Asia-Pacific open higher, mirroring the Wall Street gains. Japan's Nikkei opens 1.5% in the green, extending gains a day after the country lost its spot as the third largest global economy to Germany and entered a technical recession. The gift Nifty indicates a positive open for the Indian market. And crude prices rise on the back of a weak global demand forecast for 2024. The weaker dollar caused by disappointing U.S. retail sales also pushes up prices. Brent currently trades around $82 a barrel. Gold rises to $2,000 an ounce on the back of a weaker than expected U.S. retail sales data print. The government increases windfall tax on crude petroleum to 3,300 rupees a ton from 3,200 rupees earlier. The tax on diesel is increased from nil to 1.5 rupees a litre, while the windfall tax on ATF and petrol continues to remain zero. And domestic air passenger traffic in January jumps 4.7% on a year-over-year basis. Indigo leads with a 60% market share. The data released by the DGCA shows that on-time performance of airlines have dropped below 80% due to the adverse weather conditions. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we're looking at this Friday morning. There's clearly a lot for us to really get through, but let's kickstart by really looking at what's going on across Asia, because it has been quite a good start for all of the Asian markets that are, trading right now. Japan is the one which is clearly leading the gains this morning, so it's up 400 points right now on around 300. It's come off a bit now, but it's still holding up with a 1.5% gain for the Japanese market. You have Taiwan, Seng, both doing well on your screen. Not too much in terms of a move, but they're around 0.25% in the green as well. All Asian markets that are trading, by the way, are doing quite all right. So even Kospi and Straits definitely seeing a little bit of green to kick things off. Shanghai is still shut on account of a public holiday. The gift Nifty will come up for you, and it is indicating that the start for our own markets will be in the green. So around 74 points higher is where we're at in terms of the open for our markets. But, we've been seeing volatile trading sessions and huge swings for this entire week, right? So whether we can sustain onto these opening gains is what we're going to be watching very closely. And that's what we're really looking at in terms of the Asian market action. But let's also talk about the U.S. now, because Wall Street ended Thursday's trading session higher. So you had the Dow, which jumped around 350 points. The S&P 500 closed 0.5% in the green as well. Like I mentioned, this is actually yet another record close for the S&P. And the tech-heavy Nasdaq index also added around 47 points. We have CNBC's Bertha Coombs to get us a wrap of all of the action that really played out on Wall Street. Bertha.
U.S. markets were up across the major indexes Thursday as Treasury yields pulled back and Wall Street tried to recover from the sell-off earlier in the week. The Dow adding 349 points, the S&P 500 up 29, while the tech-heavy Nasdaq gained 47. U.S. consumers spent a lot less money than expected last month. The Commerce Department reported that retail sales dropped 0.8% in January, much steeper than the 0.3% decline analysts were predicting. Beyond the traditional post-holiday pullback in spending, the extreme weather in the U.S. over the past month contributed to weaker spending. According to Bank of America, spending fell in several categories, from gas stations to home improvement stores, as well as online. And New York City Mayor Eric Adams said his administration has filed a lawsuit against TikTok, Facebook, Instagram, Snapchat, and YouTube, alleging that they are harmful to the mental health of kids and young adults in America's biggest city. That suit comes after Adams declared social media was an environmental toxin in a speech last month. That's what's happening here in the U.S. Back over to you in Mumbai.
All right, Bertha, thanks a lot for getting us all of that action. In fact, staying with the U.S., let's also bring you some important voices on the outlook for the U.S. economy and which way the Fed could really move. Take a look.
The Fed has been saying since December 75 basis points worth of rate cuts. We want to see consistent progress on inflation in 2024. So the market shouldn't really be spooked. And I think that coming into the year, pricing a peak of 170 basis points of cuts was very optimistic or perhaps very bearish. But the reality is, I think with inflation, it's going to be 2 steps forward, 1 step back. We're not going to have an even path to 2%. But we can get there. And at some point, we're going to need to see the Fed and the market converge in terms of expectations. Now that that's mostly happened, I think it can be less volatility for the bond market in particular going forward.
So the Fed has a very, very difficult task here because they're using a blunt tool to try to navigate between their dual mandate, full employment, and stable prices. If you were to see initial jobless claims rising, if you were to see the unemployment rate rising, that's a very clear signal to the Fed to be cutting interest rates. The issue, though, is they have to balance that with inflation. And that's the other data that we got this week. Inflation actually continuing to come in stronger. And I think that's the basic macroeconomic problem that the Fed faces.
All right, that is some important opinion coming in on the US market. So we have US, which is doing well this morning. We have Asia, which is doing well. And you also have the European markets, by the way, which ended in the green. So you had the French CAC index, which is up around 66 points. It was a record close for the French index. You have the German DAX also hit an intraday high. So it's all gain of over 100 points. And the British FTSE also ended with a near 30-point gain. Now, what really helped the markets was that, investors drew positive inferences after ECB President Christine Lagarde said that the recent economic data, which has come out of the Eurozone, indicates that inflation was heading back to its target. So that is what really set markets rolling. And that is everything that we're looking at in terms of the global market cues. We need to get into a short break. But on the other side, we're going to talk about how all of these cues really impact our own markets, as well as some of the important domestic factors that you should watch before market opens today. So stay tuned.
सड़क सुरक्षा के
Hey guys, welcome back. I hope you're having a good morning. We're going to take you through the trade setup right now. We have Vivek as well as Nigel joining to help us in with how things are looking. Guys, a very good morning to both of you. Vivek, we were just going through the global market setup a while ago, and that at least looks quite positive. Sorry, Sudarshan. It's Friday. It's towards the end of the week. Please excuse me. We have Sudarshan joining us. Sudarshan, the global cues at least look very positive this morning.
Morning, Pavitra. It looks like we'll start last day of the week on a positive note. The cues from global markets are largely positive. US market, which was trading in a narrow range for large part of the day, saw a sharp surge in the last hour, and that helped all major indices close with gains. And S&P 500 has posted record close for 11th time in last 2 months. Talking about our market, while Sensex and Nifty have closed with gains, but they have underperformed broader markets. Both mid-cap and small-cap index have posted gains of 1% each against a gain of 0.3% for both Sensex and Nifty. So what is propelling this outperformance in the broader markets? That is continued buying in PSU companies or say government companies. In last 1 month, Nifty PSA index is up 15% and PSU Bank is up 21%, while Nifty 50 has given negative returns in the same period. Coming to institutional activities, FIs have sold shares of more than rupees 3,000 crore, and it was largely offset by DIIs, which bought shares of rupees 2,300 crore in the cash market. Now comes an important data. On your screen, you can see the number of stocks that have been in F&O ban on a daily basis. This week, on an average, 12 stocks have been in F&O ban on a daily basis, and mind it, it's a huge number. So what does it indicate? It tells you the volatility and wild move that many stocks have been seeing in the last few days or say last few weeks. Lastly, cues to watch, we have India's forex reserves at 5 p.m. and US producer price index for January at 7 p.m.
All right, got that. So that is everything that you should watch from an India market standpoint at the start of the trading session. Sudarshan, thanks a lot for that. But also take us through, some of the stocks that could be in focus in today's trading session. The earnings are out of the way now. So what else is making the news?
That's right. So that's the reason number of stocks that I have has decreased significantly. So first, I'll start with ONGC and Reliance. Those stocks will be in focus because government has increased windfall tax on diesel to rupees 1.50 per litre from 0. And windfall tax on crude petroleum is increased to rupees 3,300 from rupees 3,200 per ton. UPL, Fitch has downgraded rating to BB plus and outlook is negative. Dilip Bilkon, JV is declared lowest bidder for a dam project worth rupees 413 crore. Indigo and SpiceJet will be in focus. January air passenger traffic is up 4.7% year-on-year. Indigo has held on to its market share above 60% and SpiceJet's market share is unchanged month-on-month at 5.6%. Lastly, Max Fin and Axis Bank will be in focus. Both the companies have issued clarification on Subramanian Swamy's plea in Delhi High Court. Both the companies say all the approvals were taken for Axis Bank and Max Life deal and there is no legal or regulatory anomaly in the transactions.
All right, got it. So Darshan, thanks a lot for taking us through that entire list. We are going to watch for all of these in today's trading session. Finally, let's also bring Nigel in. He's looking at all of the cues from the futures and options space. Nigel, good morning. How's it looking?
Morning, Pavitra. You know, on a lighter note, Pavitra, if Vivek was a stock that was listed, he would hit upper circuit, you know. That Pavitra was just calling out for his market cue. But anyways, that's on a lighter note. Let's get to the market action. Yesterday, we had the Nifty and the Nifty Bank, both of them. They moved up and clearly there was short covering that was seen because both those two indices ended higher. And on the Nifty Bank in particular, for the second day running, you had a big short covering bounce that played out. And the FI data, it tied in with that because they covered more shorts than longs. You know, in yesterday's trade, close on 7,500 contracts is what they covered. And the net change was close on 5,000 contracts. So that's why the net short positions from around that 80,000 odd has come down to around 75,000 contracts. On the option side, there appears there's a short straddle at play. What is that? You write the strike, 21,900 call as well as put. So the same strike, the call and the put, you pocket closer around 350 rupees approximately. And you're looking at a range. On the downside, 21,550. On the upside, 22,250. That's the broad range you're looking at going by this strategy. That's a short straddle at the 21,900 odd mark. It appears so that, some traders are playing for this range. The Nifty Bank, now that's done well. It's protected the 200 DMA. It's got past the 20 DMA. Can it move to the 50 DMA? And that chart comes up for you on the screen. So let's see whether or not that happens. It's going to be an interesting trading session. Last couple of days have been good. Can the bulls drive home the advantage and say, conquer the 22,000 odd mark? Stay tuned for that. Yesterday, they gave it a bit of a fight, but faltered towards the end. Back to you.
All right, let's see if we can get to that today. Nigel, thanks a lot for taking us through all of those cues. We need to get into a short break now. But on the other side, we're going to shift focus and talk about the commodities. We'll tell you what's going on in just a bit. Stay tuned. Welcome back. You're still tuned into Power Breakfast, and let's talk about all of the cues from the commodity markets now. We have Manisha joining us. Manisha, good morning. Crude is back at almost 83. So what's really led to this big up move that we've seen?
Morning, Pavitra. Well, absolutely. The dollar index slipping is what really did the trick here, and we've seen the crude oil prices regain all the ground that it lost in the last 4 or 5 trading sessions. So yesterday was a weak day because we were dealing with the numbers of U.S. crude stocks, which gained up by 12 million barrels versus 2.3 million barrels of an expectation. So you saw many times higher the inventory buildup in U.S. U.S. Production also is at a record high. So that is what continues to keep the prices in check. But apart from that, the Middle East tensions, the global growth demand estimates for 2024, whether it is from OPEC or IEA, is between 1.2 to 2.2, and that has been supportive. Apart from that, IEA, while estimates the supply growth increase as well, but the markets do believe that as and when we start looking at interest rate cuts and the Chinese demand coming back, you could be looking at support coming in for crude. As of now, $80 a barrel seems to be acting like a pivot point for the crude prices. But a sharp decline is what we saw in case of the natural gas prices. That one is trading at a 3.5-year lows. The gas storage in the U.S. is 15 to 16% higher than what it usually is during this seasonal demand period. Apart from that, it also is mild weather forecast since 1st of March, and the producers may reduce output going forward. So as and when that happens, you could see some support coming in for prices. But overnight, we also have seen the metal prices come into positive. The decline in dollar has been supportive. Also, the U.S. retail sales saw a bit of a decline. And then there were statements from the Chicago Fed president saying that central banks should be wary of waiting too long before cutting rates, and that also had its impact and is the reason you've seen buying come back in many of the commodities in Asia right now.
All right, Manisha, thanks a lot for getting us all of those updates. Clearly, there are big moves that we've been seeing in the commodity markets as well. But moving on now to some updates on the farmers' protest in New Delhi. Several farmers' unions, including the Samyukta Kisan Morcha, have called for a nationwide strike today to press for their demands before the centre. The Samyukta Kisan Morcha urged that all like-minded farmers' organizations must unite and take part in the Gramin Bharat Bandh called by the central trade unions. Meanwhile, the third meeting between union ministers and farmer leaders in Chandigarh regarding the farmer protest ended without any agreement. So this has led to the scheduling of another round of talks, which will take place on Sunday. Remember, the purpose of the protest was to pressure the BJP-led centre to accept farmers' demands, including a law on minimum support price for crops, as well as loan waiver. So the centre had made it clear that announcing a guaranteed MSP will not be possible. We, of course, going to keep bringing you updates on the farmers' protest, which is underway near Delhi right now. But with that, let's also move on and bring you some updates from the Israel-Hamas war. The Israeli military raided the Nasser hospital in Khan Yunis, expelling patients and medical staff from one of the last operational hospitals in Gaza, where thousands of Palestinians had sought shelter. Israel stated that it was searching for fighters and captives, while Hamas and medical groups have denied the allegations of using the facility for military functions. According to the Israeli military, the operation was based on credible intelligence that Hamas held the captives taken in the October 7th attacks at the Nasser hospital and that bodies of Israeli hostages may be at the site. Gaza's health ministry also has confirmed that the site had been stormed after Israel's defense forces forced the evacuation of civilians. All right, so that is an important update. But with that, we're going to wind down on this edition of Power Breakfast with the news that the Asian markets are well in the green. Like I mentioned, Japan is still leading the gains this morning. So it's up over 1% in the Japanese markets, 1.5% there. So, big move seen over there. The Hong Kong market has moved up in the, last few minutes that we've been talking. It's 0.5% in terms of a gain on the Hang Seng. The Taiwanese market seeing a little bit of green as we kickstart things. Looks like the start for our own markets will also be positive. We'll wind down on that note. We have Bazaar Morning Call coming up in 2.
Powered by